It's Pranjal, who's a serial entrepreneur with over 10 years in SaaS, security, and Web3, and currently the founder of Paxo. Ladies and gentlemen, boys and girls, children of my age, put your hands in the air and welcome Pranjal. Come on, guys, keep that round of applause going.
Morning, everyone. I hope with such a vibrant start, all of us are ready to deep dive into something more serious. My name is Pranjal Parashar. I'm founder and CEO of Paxo Finance. We are into under-collateralized loans. I've been into tech ventures for almost a decade now. I started my career as a consultant in one of the information security companies, then built a hardware startup, sold it to Kodak Alaris back in 2015, started a SaaS venture, scaled it, went through merger, demerger, acquisition phases. And now over last couple of quarters, maybe almost 18 months, I'm involved with Paxo Finance. So if we look at traditional finance, which is much more evolved compared to, which is it's a large space when we look at traditional finance. Compared to that, crypto is still a smaller fraction. And if we look at DeFi, that is even a small, much smaller fraction of it, barely 0.17%. So that shows what's the overall opportunity in this entire space. We have just started. It's just been a couple of years for some good DeFi protocols, but the overall opportunity in this entire space is huge, right? Even if we reach, let's say, 4 or 5% of traditional finance, that will be a large milestone for the entire ecosystem. Over last 1.5 years, we have seen significant growth. We are seeing a lot of users are moving towards DeFi as a protocol, be it lending side or be it using DEXs. We'll see what all use cases people are getting into. But overall adoption of DeFi as a instrument or as a medium, we are seeing some serious traction there. There was a recent report by Chain Analysis, and they mentioned that average age of a user in DeFi is over a year, right? On the same horizon, people who are involved with NFTs, that age is a couple of months. So we are seeing serious people getting into DeFi, they are experimenting with it, and probably they are taking larger benefits out of it. Just a summary of all the use cases we have seen. Of course, DEXs are one of the key areas where we have, or most of us might have interacted in our time over last few years. We have also seen some good lending protocols. Most of them are over-collateralized. We'll talk about them in details. Like Aave, Compound, Bankvi, on every chain we have a couple of good lending protocols. So that is also a pretty evolved industry, right? A lot of innovation has already happened. Of course, Aave, Compound, they are leading the wagon here. 80 or 90% of overall lending market is owned by them, right? Then we have seen some derivatives protocols. In fact, we also have some sponsors and participants here. Maybe they will talk more about derivatives as a space, but that's the third area where we have seen some good protocols. In last couple of quarters, we have seen some good synthetic assets protocol. We have seen a rise of protocols going above Aave, right? And that is one area where I believe innovation will continue to happen. We also have other emerging areas like prediction markets, marketplaces, insurance, asset management. But I will say these are the areas where we are yet to see a larger success, stability, and gain for users. So where would the next 100 million of audience will come in DeFi? That is not just going to come through DEXs or marketplaces or insurance or lending protocols. Most of the protocols, be it lending side or even DEXs up to a certain extent, they have their own challenges, right? It works well, it's a very good start, but 90% of users hold less than $5,000 in their wallet, right? It's just the top 4 or 5% wallet users holding majority of coins. And these protocols are really well suited for them, they are meant for whales, right? If you want to use any over-collateralized lending protocol, you need to have significant volume. But what about people with, let's say, $500 in their wallet? What about, gamers in Philippines or Vietnam or Nigeria, where the overall holding is maybe just $500? So all these protocols are not designed for them, but they constitute around 90% of overall wallets. So the 4 steps or 4 areas which will invite next 100 million users into mainstream DeFi, I believe one of them will be seamless integration of centralized protocols or centralized application with DeFi. Other areas would be amalgamation of DeFi into core gaming ecosystem or a metaverse ecosystem. The first phase of innovation in DeFi is great, but how about bringing those innovation in core, let's say some metaverse, right? Imagine a scenario where you can buy a land in some metaverse and you can take a loan from some protocol, right? Those use cases, if we start embedding them in NFT projects in metaverse, I think that will drive next level of innovation. I think there's a word for this, it's called MetaFi now. Then this other part will be efficient access to capital. So it's not just over collateralized lending. Over collateralized lending is equivalent to gold loan, right? Where you put an asset worth $100, but you get loan worth $60 or $70 only. And how many people use home loan compared to gold loan, right? People who take under collateralized loan, they will be, that number will be significantly higher than people taking over collateralized loan. So we need to ensure through some instruments, some innovation that more and more people are able to access capital, right? And the last part is on-chain, newer on-chain instruments using, so if we look at traditional finance, the industry there is much more evolved. There are sophisticated instruments around in multiple assets, right? And people are trading that, people are making money out of it, utilizing it in real world. That level of innovation is yet to happen, right? So we'll see some more innovation on that front as well. So the first part, which is amalgamation of DeFi into metaverse, we have seen the first phase of this entire evolution where we have good protocols and people are already using it in traditional vanilla way, right? Imagine, a middleware where all the use cases like fractional ownership, right, or derivatives, or collateralization, or even rental, buy now, pay later, if these use cases are embedded in the existing ecosystem or in the newer protocol, that will bring more users into DeFi. That will allow somebody to maybe own a Bored Ape, maybe in a combined, maybe this entire hall can own a Bored Ape, but individually, maybe just handful of people can own it, right? I can see some faces here who might be holding it or who can actually hold it, but all of us combined, we cannot afford to buy, let's say, something worth $500,000, but with a fractional ownership, we can do that, right? So those use cases will definitely help newer audience to be part of DeFi ecosystem and take larger participation in this. The second part is allowing access to capital or credit, and for that, I believe the under collateralization is the way. We have seen success of over collateralized protocols, it's been great, right? But with under collateralization, we can allow millions of users in developing countries or newer crypto audience to participate, be a part of larger ecosystem, and that can be achieved either through one of the 3 approaches. The first can be where we use an on-chain credit score, and some protocols are already working towards it, where they analyze the history, profile of wallet users, and based on that, credit is passed on to a DAO or in a peer-to-peer model where somebody is assuming that loan risk, right? That's a good approach, and we have seen some companies doing it. In B2B, we have seen TVL reaching 200 million also. The good examples would be TrueFi, Goldfinch and all. The second approach can be walled guarded setup, where instead of relying on on-chain credit, we just rely on a trustless and a permissionless protocol. And that can have an approach where the asset or the investment is locked within a walled setup. We are seeing some innovation on that front, and that's the area where I'm also investing majority of my time. I believe one of these 2 approaches will give the next DeFi winner in the next couple of quarters, and we should see some innovation on that front. The third option is where some third-party risk is being assumed by someone. We have an independent agency providing credit risk, and lending borrowing is happening on the blockchain using that model. Flash loan is already mostly covered in the over-collateralized lending protocols like Aave, Compound. They are doing pretty well with it. Newer instruments for more active participation from DeFi users, that is another area where I believe we have seen success of protocols where there are liquid staking, right? How about clubbing it with the derivative market? How about leverage liquid staking, right? How about creating newer instrument which can unlock value locked in the current staking ecosystem, right? So those innovations, we are seeing some success. We have a couple of names where TVL is above $1 billion, but I believe, okay, how many of you have earned more than 50% APY through staking? Some at any point of time, right? Okay, I can see some hands. How many of you have earned 50 to 100% APY, but with the assurance that your money will not go down even if token value reduces? So there are strategies like that in traditional finance, and I believe an entire product can be planned around that, right? So of course that strategy is called delta neutral, right? If some of you have been part of traditional finance, you might have heard about it. But there are strategies like that where you can stake and do something so that you are not affected by price fluctuation. So imagine clubbing those type of use cases and building protocols on top of it. These type of innovation will again give confidence to people who are just probably considering to be part of this ecosystem, but they have their own fear or constraints. The last part will be amalgamation of or the integration of centralized products with DeFi. So I see a lot of purist mindset in DeFi space, right? If you are just moving out of MetaMask, you are not the real DeFi guy. That's the notion I see in Discord and some of the communities I'm part of. I believe we have to leave that mindset. At the end of the day, all of us are users, right? I'm using Uber, I'm using WhatsApp, and the kind of simplicity they provide, right? If I have to struggle with MetaMask for using certain protocols, how long I'm going to do it, right? So at the end of the day, as an entrepreneur, as a builder, we have to create bridges between centralized and decentralized ones, right? And at the end of the day, we need to just focus on user experience. If we just solve that part, I believe this will bring majority of DeFi users in the next generation. People, it's not easy. Can someone who is not very familiar with overall ecosystem go ahead and deploy even $10,000 in some staking protocol? It's not that easy, right? So we need to simplify it, we need to dumb it down, we need to make it seamless. And I believe this part will contribute significantly in the adoption of DeFi. I also strongly believe bottom of the pyramid will contribute more in the coming days. Whales, all the larger wallet holders, they have done really well in last few years, and the protocols have really served them well, right? Be it lending protocols or even DEXs. But this is the time to build product for bottom of the pyramid, for the smaller wallet holders, or for people who are just starting in this entire space. So Paxo is building an under-collateralized loan protocol where we believe that providing access to capital so that people can invest in crypto, that is the first step. And we are solving three major use cases. Investment loan for fungible and non-fungible tokens. So what it means, you have home loan. If you want to buy home, you just go to a bank and you take loan and you buy it, right? You have car loan. Do you have something to buy Bitcoin? Do you have Bitcoin loan? Do you have Ethereum loan? No, we don't have, right? Imagine you want to buy one BTC today and you want to just pay it fractionally over a period of next 1 year or 2 years. You don't have any trustless, permissionless protocol for that. So Paxo is solving that problem where we are providing investment loan to invest in crypto. And the beauty of it, this is a purely trustless and a permissionless protocol. You don't need any credit rating, you don't need any health check. It just, you just connect your wallet, just check, just meet the criteria in terms of at least your wallet should not be banned. That's the only thing we care about. And you just go ahead and take loan, invest in Ethereum, Solana, Bitcoin, 30 plus coins. The second use case we are serving is leverage liquid staking. So again, this is one of the derivatives we earlier talked about. Imagine you want to borrow Matic so that you can earn staking interest, right? So you can borrow Matic at, let's say, 4, 5, or 6% interest, and you can earn 11 or 12% of staking outcome, right? So these are some of the use cases. And the third part is, imagine you do future and option trades, and again, you have a centralized bridge. How many of you would like to trade on Indian exchanges and do not want to worry about TDS part or the taxation part? Forget about the taxation, the TDS part, right? Some of us do have aspiration to do that. But right now, none of the protocols or even exchanges enable that. You know that if you do futures and options, you don't need to pay a TDS. So INR BTC pair or INR ETH pair, if there was an option where you could trade, right? So that would have opened a lot of doors for users. So these are the three use cases where we are involved. The way it works is it's a fork of Compound. So lending and some part of interest rate model is forked from one of the stable version of Compound. So it's a multi-pool architecture where users, they just connect, they can select the pool they want to be part of. It's connected with DEXs. We are using Price Oracle to figure out the pricing. And then there are lending oracles, there are liquidators. So if any position goes down, then the position is sold, right? Same way it happens with Compound. It's a trustless and permissionless protocol. We went live on Polygon testnet last month. We got 19,800 users. We should be live on Polygon mainnet this month. So last couple of quarters, we have worked on the protocol. We have raised a small seed round backed by some of the well-known VC funds in this space. Also, one of the exchanges based out of India. This quarter, we are going live on mainnet. Our private round is also open. Our bug bounty is being launched now. And we should start our liquidity mining program sometime this quarter. We have a huge roadmap of what all we want to do. Of course, the first phase of investment loan is just the first milestone. We do want to add more pools. We want to add more tokens. We want to add even NFTs eventually, once the infrastructure is ready for it. We also want to ensure that we go on, other chains as well at some stage. And eventually, we want to hand over the overall governance to a DAO. So we are going live on mainnet this month. We are looking for energetic folks to join our team, be part of this, build with us. We'll have a protocol. We'll have a 10 million fund once we launch our token to incentivize developers to build on top of Paxo protocol. Thank you so much. Thanks.
एक मिनट, we'll take a selfie.
Sure.
Mike, भूल गया मैं.
We'll take it with my phone.
Thank you, Pranjal. Everyone, come on, yeah, give it up for him. Give it up for him. Get the vibe going. Get the energy high. And like after every session where we take selfies with the speakers, so let's go ahead. Pranjal, can you please step a little ahead, and we'll take a selfie, but with the crowd actually, and let's get this going. Aye. Everyone, come on, put your hand up in the air. Put your hand up in the air. Yeah. That's nice. That's nice. Let's do this. Thank you so much, Pranjal. Thank you. Does anybody has any questions? Do you want to quickly take a question? Okay, this Pranjal, 1 second. Somebody has a question there. Any volunteers around? Can you pass on the mic? Nobody? Sir, aye. Let me quickly come up to you. Pranjal, you're mic'd up, right? Yeah, okay, cool. Yeah.
Yeah, I just wanted to ask, do you guys have any plans on making protocols that can give loans against liquidity pool tokens?
I'll say at this point of time, we do not have any thoughts around that, but that's a good suggestion.
Because currently, in my opinion, LP tokens are like one of the best things to give loans against, specifically if they are stablecoin pools, because they don't really have any impermanent loss. And if you're making a futures and options exchange on top of something that you're giving loan against, then that can be a really good use case for any swap. Rather than minting your own tokens or giving out governance tokens, if you just let people put your money in LP tokens, that would make a sidewise spot exchange, and you can use that funds on your futures exchange, and the protocol would earn through the trading fees earned there.
Overall space is so exciting. There are so many areas where innovation needs to happen, and based on the limited capacity bandwidth we have, I think all of us can pick certain battles. But definitely I see that one of the areas which can be worked upon.
Yeah, okay, thanks.
Thank you. Thank you. I think somebody else had a question. Can you please pass on the mic to him? Hi. Inko mic de do aap.
Thank you, Pranjal. And also to add to your point, LP tokens can be used for collateral, and they are used in a couple of protocols. But just to understand the under collateralized part, so like how does under collateralization work? Number one. Number two, what is backed by? Number three, if it's under collateralized, what are you doing liquidation of?
Thank you so much. At least you paid attention to some part of the presentation. So I talked about 3 different approaches to under collateralization. We are currently working on with a walled guarded approach. So just like your home loan or a car loan model, what happens? You put in your 10-20%, 80% you borrow from bank, and whatever you buy, that becomes the collateral. So same way, you put your $20, $80 you take from protocol, and for combined amount you buy ETH. That purchase ETH is locked within Paxo.
Isn't that derivatives? Leverage derivatives, I mean?
Yeah, so in most of the derivatives, there is no real delivery, right? Can you use derivatives to further stake that purchase token? No, right? You cannot do that.
That's a security risk. So if like there are protocols like Zeta, which have like come up on Solana, where you only put up the maximum loss you can bear. So I see no reason why you cannot put up the other collateral, but it's very risky. Like that's why you have isolated margins and like cross margins, right?
So in this space, people who are doing margin trades or even staking, they are aware about the risk, right? So yeah, you are right. So in fact, this is one of the use cases, right? 3 use cases we talked about. So margin trade is one of them. So we can give 5x, 10x leverage, and people can trade. But the major difference is, how about leverage staking? How about taking loan, buying Matic, and putting it on staking? So overall, your interest rate probably will be negative in this scenario. Happy to take it offline. Thank you.
Yes, thank you. Thank you. I think I was waiting for that. Happy to take it offline. Come on, everybody. Give it up for Pranjal.